Rough week for the markets last week, kind of a bounce in the futures right now. I want to see how you see today shaping up. What's your WEX word of the day?
Mercurial. The market just has been very, very volatile, very emotional. Things change from optimistic to pessimistic on a daily basis. We would not get caught up in the negativism. We would be buying last week's dip.
All right, so you're saying you're buying last week's dip, but are there certain sectors that you're really focused on right now when you're talking about buying the dip?
Well, in terms of buying the dip, the things that have gotten beaten the worst have been technology. We had been a little bit more neutral toward technology about a month or two ago after the great run. In light of the sell-off, we think you can buy a lot of names that have very good prospects, but whose stocks have pulled back anywhere from 15 to 30%.
So when you say buy the dip, that obviously means you're buying right now when it's lower, but you think it has more room to run. Something I want to bounce off of you. One of the things that's pushed the tech sector higher are the earnings expectations. Really strong earnings for tech last quarter. But when you look just a bit deeper into the numbers, NVIDIA, they accounted for about half of that earnings growth. In fact, without NVIDIA, the earnings growth for the tech sector would only be 10% as opposed to the 20% it actually posted. When you say you're buying the dip on tech, are you really just buying the dip on NVIDIA? Is the idea that NVIDIA is not only going to meet those expectations, but possibly exceed them?
So we like a lot of technology here. One of the companies that we're not involved with and we would not be buying is NVIDIA. So a company like Microsoft or Qualcomm or Google are all up very significantly. They have had very good earnings. Their prospects are very good. The outlooks over the next 2 to 3 years are good, and the valuations are okay. So those are the type of companies that we're talking about buying the dip.
So it's not the whole sector. You think it's an individual stock story when you're talking about buying the dip?
Absolutely. And we also think you want to look at the broader market. There are lots of places in the market where stocks have either not done as well over the last year and a half or selling at 15 and 16 times earnings. Good prospects. Those are the type of things that we'd also be putting money in. Just not technology. Spread it out.
How do you view Apple right now? Obviously, a big event coming up today. We're expecting to see them roll out their consumer AI offerings when it comes to the iPhone. A lot of people think, including Dan Ives, this could re-spark an iPhone buying cycle. Are you concerned about the impact of Apple on the broader market? We were just showing the chart earlier today. Since WWDC back in June, Apple shares are up double digits. The market's just kind of sideways, up about 1%. Worried about a sell on the news situation here that could impact the broader market?
Figuring out the short term in Apple is always very difficult. We do think if you have a 3 to 6 month time horizon, the stock will be nicely higher. We do think there is going to be an AI-driven cycle. We think it's a lot more dynamic than the 5G upgrade cycle. So we're pretty upbeat about Apple's prospects. The stock is fully priced, but we do think it can continue to do better. So if there's any weakness in Apple this week, we would put money into it.